Goldman Sachs' negative report is positive for Bitcoin. Next on your 4-Minute Bitcoin. Today's show is from a post by Tony Spilatro at Bitcoinist. Over the weekend, news broke that Boston-based Goldman Sachs was planning to hold a call with its chief investment officer on the economic outlook of the U.S. Topics discussed in the call included the U.S. dollar as it faces its worst inflation yet, and how assets such as gold and Bitcoin would come into play. But on the morning of the call, slides leaked on Twitter revealing that Goldman Sachs doesn't think Bitcoin is an asset class at all. The firm further points out that Bitcoin doesn't generate cash flow like bonds or through earnings on economic growth. They say they aren't even diversification benefits due to unusual and unstable correlations. Strangest of all, they actually claim the digitally scarce asset, in which only 21 million will ever exist, showed no evidence of being a hedge against inflation. Yet the company believes that gold does serve this function. They also ironically call out the dollar's annual estimated inflation rate of 2%, which would reduce today's dollar value to just 82 cents in only 18 years. Goldman Sachs may have slammed Bitcoin, but other institutional mainstays beg to differ. Recent deals between previous Bitcoin pundit JP Morgan with Coinbase and Gemini show that institutions are softening toward the asset class that Goldman Sachs says isn't an asset class. Goldman Sachs' attack on Bitcoin is positive, though. Bitcoin just received exposure to some of the wealthiest individuals in the world. These high-class investors rely on insight from the likes of Goldman Sachs, but ultimately, they make their own decision on where to put their money. And many of these high-wealth individuals, well, they may not have considered Bitcoin as a monetary hedge until the call. Upon doing their own research, it could lead to a better understanding of Bitcoin. They may learn of the hard-capped Bitcoin supply that was recently reduced further with the halvening this month. Bitcoin's initial use case may have been for buying drugs on the dark web, but because the technology held such promise, it has over the years become a respected financial asset. 10 years ago, the world didn't even know what Bitcoin was. So while Goldman Sachs sought to discourage investors from buying into Bitcoin with all the recent hedge against inflation talk, in the end, they've only further cemented the asset class as something to pay close attention to. It was P.T. Barnum who stated, "Say whatever you want about me, just make sure you spell my name correctly," as he felt there was no such thing as bad publicity. Now, in this case, that may also be true for Bitcoin. Let me know your thoughts, as always, in the comments. And if you enjoyed the 4-Minute Bitcoin show, you may want to take a moment and show your support by buying me a cup of coffee. That's right, you can buy me a cup of coffee at GaryLeland.com/coffee. You can buy me 1 cup of coffee, or you can buy me a cup of coffee every week for a year. That's completely up to you. But I promise you one thing, if you buy the coffee, I'll drink the coffee. This is Gary Leland, and thanks for watching another episode of 4-Minute Bitcoin. This is a BitBlockBoom.com production.